Good morning, everyone. This is Sakis Paraskevov, fundamental analyst at IronFX Global, bringing you the morning comment for the 29th of October. Fed officials held off on raising interest rate, but signaled a hike could come at the December meeting if they see progress in both realized and expected objectives of maximum employment and 2% inflation. This is the first time that the policymakers explicitly said they may raise interest rates at their next meeting, pushing the probability of a hike from around 30% ahead of the meeting to almost 50% afterwards. Another important development was that the Fed dropped from the statement the previous warnings about the global growth concerns and the financial market volatility. At the September meeting, policymakers pointed to worries about global growth and turmoil in financial markets as reasons to leave rates unchanged. Since then, both turned in Fed's favor and dollar rallied on the hawkish statement. Following the conclusion of the FOMC meeting, we will look closely to the October employment report, the minutes of this meeting, and on any Fed speakers going into December meeting for more insights about officials' view over the outlook of the US economy. Recent comments from Fed officials have highlighted the divergence in views between the committee members, Fed Brainard and Tarullo, which said that they don't see a rate hike coming before next year, while Vice Chairman Fisher, Lockhart, and Williams shared the view for a hike this year, on the assumption of continuous solid economic growth and further improvement in the labor market. Once again, the decision on whether to start normalization this year has become data-driven, and significant positive US data surprises are now required for the market to reprice expectations and USD to gain further. Elsewhere, the Reserve Bank of New Zealand kept interest rates unchanged at 2.75%, as was widely expected, but said that further reduction in the rate seems likely, even though the bank expects the CPI to return within the target range of 1 to 3% by early 2016. Continued strength in New Zealand dollar would require a lower rate path than would otherwise be the case. As a result, in order to offset the impact of the strong currency on the inflation outlook, the bank may cut rates again in the foreseeable future. This limits the upside moves in New Zealand dollar USD in our view. As for today, during the European Day, Germany's preliminary CPI data for October is forecast to have risen to 0.1% year-on-year from minus 0.2% year-on-year in September. A rise in the inflation rate of Eurozone's growth engine could indicate a rise in the bloc CPI rate to be released on Friday. This could support the euro temporarily, but given the more dovish than expected remarks by ECB President Draghi at last week's meeting, we will treat any rebounds in euro as providing renewed selling opportunities. Germany's unemployment rate for the same month is expected to have remained unchanged at 6.4%. From the UK, we get the nationwide house price index for October, and from Sweden, we have retail sales for September. The forecast is for the retail sales to have risen 1.5% after declining 1.7% in August. A rebound in retail sales will be in line with the Riksbank view that expansionary monetary policy is supporting the continued positive development of the Swedish economy. Nevertheless, given that on Wednesday the bank decided to extend its QE program and that it still sees considerable uncertainty regarding the strength of the global economy, we would treat any SEC rebounds as providing renewed selling opportunities. In the US, the main event will be the first estimate of Q3 GDP. Given the drag from the net exports and slower inventory accumulation, expectations are for a significant slowdown in Q3 growth despite the solid growth in private consumption. The Fed statement on the economy, however, was unchanged, and the committee still expects that with appropriate policy accommodation, economic activity will expand at a moderate pace. If there was going to be a huge downward surprise in the Q3 GDP figure, Fed officials should at least make a reference to it by adjusting that part of the statement. In addition to this, the final Atlanta Fed GDP Now model estimate points to a 1.1% quarter-on-quarter reading, which is a higher from an earlier projection of 0.8%. As such, we could see a positive surprise in the GDP reading that may support the dollar. The quarterly PCE deflator is also coming out, and the forecast is for the rate to have slowed from the previous quarter. Pending home sales for September are due to be released as well. Expectations are for pending home sales to have improved in September, confirming the overall strength of the housing sector and that the decline in new home sales was just an outlier. Initial jobless claims for the week ended on October 19 are also to be released. From Canada, PPI for September is forecast to have fallen at a slower pace than in August on a monthly basis, but following the disappointing CPI readings last week, another disappointment could weaken CAD further. We have three speakers on the agenda: ECB Vice President Vitor Constantio, ECB Governing Council member Erkki Liikanen, and Atlanta Fed President Dennis Lockhart. For more information, including technical analysis, please read the full comment on ironfx.com or download our app and get all the information you need to trade delivered directly to you. And also, follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Sakis Paraskevov, fundamental analyst at IronFX Global, wishing you solid trading.